Good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, August 22nd. Michael Boutros here with you this morning, guys. Great to be here. Aurelian, Jaya, Kamal, Christopher. We got all the Pete's in the house. Mark and Ty. Great to see you guys in the room. Lots to discuss today. All the dollar crosses are super interesting. Now, I want to caution you. Again, I kind of put that note out yesterday, but I want to caution you about chasing some of these trades. Some of them have moved pretty decent stretch over the last day. If you're holding positions short dollar, namely the long euro or even some position on the Swiss, I think you're all right. New positioning on the short side of the dollar, is tough from here. Okay, so we'll go over those setups, but we have DXY, euro, Aussie from last night, Kiwi from last night, Swissy from last night. We'll go over the dollar yen setups, still holding 109.90, still critical support. Okay, you guys know where I stand now. We favor the downside break, but until we get through that level, despite the dollar losses you're seeing, dollar yen still continues to hold that support. So watch that level closely. Sterling, it's been a decent play. I haven't had the kahunas to jump into it, but it's been a decent play to the upside. We'll look at those levels. And dollar CAD at monthly open support as we speak here. So Jamie's entry on the swing trades, guys, literally 130.04, missed by like 2 pips. I popped into it a little bit, so there's still some opportunity there. We'll take a look at those levels, and then we'll wrap up with gold and the SPX. Peter, you're in the room. So you saw the SPX yesterday, huh? Did it take you out of that short position? It rallied right through, but then it closed the day below that level again. Isn't it ridiculous how that happens sometimes? So I still hold that as resistance. On a daily close basis, we were unable to make a fresh high on a close basis, and it still leaves the trade vulnerable. Again, these highs are never, or these tops are never really simple to play. So we'll take a look at the SPX levels for you again today to wrap things up. And that's what's on my menu. It's pretty stacked today, so let's jump right in. If there are any other trade setups they'd like to review or any assets they'd like to cover that weren't mentioned, as always, feel free to throw them on the message board at any time. So let's jump right in. I just wanted to highlight the daily chart yesterday on the DXY. I didn't provide you with the intraday levels because they're pretty much the same as the daily charts are reflecting here. Basically checking the November highs, 95.15 from last year. We're obviously making a breakthrough that right now. Look, objectively on this trade, guys, the major key levels you're looking for down from here are going to be the monthly open, which comes in at 94.56 right here, and then confluence support at 94.20, 94.27. It's a basic 38.2 longer term from the decline off the 2017 highs. And slope, basic slope off the low. So this is the dominant slope for 2018. Okay. Resistance, what I noted yesterday, the focus stays lower below 95.65, which is essentially the swing highs that we made back here in July. Just a nice pivot in price. As long as we stay below this, the propensity for this to keep going is there. Here's the intraday chart. And again, why near term, I'm not really on board with trying to short from these levels. Here's the intraday, okay? Again, some basic slope off the highs. A parallel there with support, break, saw acceleration, resistance on that same gradient. A parallel extending off the lows that we made back here. Didn't quite touch here, but now you're basically getting to another region of interest. This is a basic 236, okay, from the advance off the lows that we made in February. So the entire advance off the yearly lows, the basic 236 gets you 94.90. The 618, I should change the color of this for you. Okay, the 618 of the just near-term advance from the July low gets you 94.96. Okay, so we're there right now. All right, we're there right now. Now, I'm not going to, say that this is an opportunity to fade. You're still deep in oversold territory on the 2-hour chart. You're still deep in oversold territory on, well, not as deep, but even on the hourly, you're still down there. The propensity for the market to keep running is there, but price is checking support. So if you're holding short dollar exposure, this is where you want to take a little off the table. If this does materialize in some sort of rebound in U.S. trade, you're seeing divergence here, price action making a lower low on the hourly. Here's yet another low or a low. The oscillator is still holding, right? No new extremes in the oscillator. So you're seeing the divergence signal kind of rear its face. But yeah, I mean, this is initial support on the near-term front. Like daily chart still has a lot of risk to the downside. I just don't want to, I want to prep you guys, kind of ease up the application of a short dollar position from these levels. Okay, we've had quite a precipitous drop here off the highs. All things held constant, we're still bearish sub 95.65. Downside break from here, it gets a little dicey, but you're looking for monthly open support near 94.56. Any questions on DXY? Now, today you do get the release of the FOMC minutes at 2 o'clock, at 2 p.m. Eastern. They held rates, right? So I'm not really expecting that we're going to see anything material come out of the minutes today. More so important is really going to be Friday, okay? That's when Jerome Powell takes the stage at Jackson Hole, Wyoming at the annual economic symposium. That's where, if we do get any tidbits on where the Fed stands, that's where it would be, okay? I don't think, remember, these minutes are from last month, guys, so they're backwards looking. I don't know how big of an impact it'll have with a fresh batch of rhetoric coming out in just a few days' time. So just keep that in mind. But yeah, finally, a nice dollar reversal here. Welcomed, very welcomed from our end, right? Here's dollar index on the weekly charts. Just wanted to highlight this as well. Another reason why yesterday I was kind of prepping or softening my short exposure was because, again, not only those November highs from last year, but you're also now breaking back below the 200-week long moving average and the 50 line for the current upslope that we've been off of last year's lows and this year's lows. So that 50 line, remember, was resistance all throughout May, June, July. On a closed basis, it was rock solid, right? Here's the break. If we close back below, that refutes it, right? That would shift the focus lower on a little bit more of a broader scale here. So the dollar index, nice spot to turn from. Welcome to reversal. Prep your or soften your expectations here as we get into the U.S. trade session, as we come into these lows near term. All right, any questions here on DXY? Righto, number 2, Euro. Also another super clean setup. I'm not in this. Again, all along exposure for me was taken out yesterday on this last advance into 1576. I was kind of hoping we get a pullback near 1530, 1510. Really sweet spot. Lots of former swing lows. The median line for the current operative slope, upslope support off the lows, all of it gave me this 20 pip region here. I was begging for the pullback and overnight trade. It didn't get it. So it ripped higher. Again, I can't chase this. I can't chase this any further. Here's what it looks like. Well, I guess let me show you the 120-minute chart. We'll take the top-down approach real quick. Here's Euro on the weekly charts. Okay, another reason why we are softening our expectations here, kind of getting a little hesitant to get excessively bullish at these levels. Where we're coming into is a big, big deal. Okay, this is the weekly chart for Euro dollar. Here's your close lows for October, November of last year. Okay, 1605. Remember that level. Former trendline support off the lows from 2016, 2017, touched again this year, break, saw acceleration. Here we are testing the underbelly of that slope as resistance. So maybe a little bit higher in intraday price, even 1640s wouldn't be so challenging. Okay, so that's the weekly chart. I also want to highlight that if we close the week at these levels, you have a clear-cut momentum trigger break in view. Things are starting to get excited, right? So this is euro dollar on the weekly. No change to any of the levels from last night. Whoops. Okay, here's euro on the weekly from last night's update. Same exact levels. We're checking an area of resistance as we speak. Here's the daily chart from yesterday. One of the other reasons I was concerned about favoring dollar long or euro long positions is because that 50 line on the daily chart. Here's the 50 line for the parallel that we've been following off the highs from June. Caught resistance there. Same slope gradient, caught support for the low of the year. So an area of which you'd start to get concerned of a little bit more of a pullback Again, 1510, 1530. Look at this region, guys. Support, 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 support. Goes all the way back, right, to the 2016 high close. So really nice pivot in price. Here's euro on the daily charts now, okay? We've pushed through that range. Here's that slope, the 50 line. We're pushing through this now, okay? So we're basically checking this swing high from earlier in the month. Look, this is the big region. Just below the monthly open, you have basic slope resistance. You have former triangle support, broke, test as resistance. That also converges all up here near 1615, 1660. So, you know, knowing the direction and knowing the levels is key, guys, but that doesn't always mean it's going to offer an opportunity. So again, I really have to stress, if you're not in a long euro position right now, there is no play for you here. Okay, you do not want to buy at this level. So, you know, knowing when to get involved, when to operate is just as important as knowing the direction, knowing the levels. And at this point, if we're not in it, again, if you are trading in it, here's the levels that you should be mindful of, okay? If we get back below 1576, which is the level that we talked about yesterday as resistance, right? We want to see a pullback into this level to get long. You only got as low as 1550 for an overnight trade. So we were looking for another 20 pip drop to get back on the long side. Couldn't get it. So again, here's the stretch. Momentum is an overbought, but you're starting to see what could be divergence, right? An overbought condition, weak signal. But what I wanted to highlight is that you're coming into a basic support trigger and momentum. Okay, so just watch that into the US trade session today, right? For the onset of some sort of corrective pullback. You know, at this point, guys, if we do get the pullback, I don't know if it's going to get quite this deep for the entry. Ultimately, I do want to see 1650, 1660. We just talked about that. Even 1670, I think is what I noted last night. 75 is where that confluence region is. But you know, how we get into that at this point is kind of where I'm scratching my head. So for me, I'm not going to try to position on the long side. All I can do here is wait on the sidelines. If we get a stretch into this region in trade today, you know, specifically on the minutes, this might be an opportunity to fade for a near-term short position in the euro. But for all intents and purposes, right now, you're basically looking for a stretch, possible exhaustion into 1650, 1675. Any questions on euro? Here are those levels from yesterday. So we're looking for hesitation here. You got a little bit of it, but not deep enough to warrant a new entry on the long side. And here we are back to the highs again. So, you know, look for exhaustion into this region. If we do break back and just completely collapse from here, we're still looking for, you know, 1510, 1530 is a possible area of support. Major pivot in price for euro. Questions on euro dollar? That is number 2. Aussie dollar. Here's Aussie. Another one we covered from last night. It's been a snooze fest. In fact, heading into the U.S. trade session today, guys, the dollar is weaker against all its major counterparts, save Aussie. Okay, Aussie has actually been unable to make any progress. No surprise. We all know the level that we've been watching. The threshold, the key zone, 73.27, 73.36 was the key pivot in Aussie. Here's the near-term picture yesterday. You know, I just wanted to see, it looked vulnerable for a pullback. You had some strong divergence into the highs. We were looking at that 73.75 level, 73.74 level as resistance. So, you know, looking for a pullback into this region, I want to see a pivot. If we break back below, I do think you get the deeper correction in Aussie again. But for all intents and purposes, we need to respect that 73.27, 73.36 level. Here's Aussie now. Okay, we pulled back a bit. Obviously, like I said, Aussie is the only major weaker against the dollar into the U.S. trade session. And look where we found support. Can't make this stuff up, guys. Pull back right into 73.27, 73.36, and here's the rebound. Okay, so this one's a kind of a snooze fest. I don't want to touch it. If we get through the highs, 74.12, levels are unchanged since earlier last week. Um, any long exposure you take needs to be against 73.27 on the bottom end of this for the move higher. But again, it's kind of like trying to play the extreme after the stretch. I don't like chasing these trades. So, um, you know, watch these levels unchanged. 73.74 near-term resistance. A breach target 74.12. That's the May low. Bigger resistance is up here. Okay, at the monthly open, basic slope or triangle resistance, that converges right in this region up here. Okay, now it would be sort of the breakout to refute this massive downslope here in Aussie dollar. Here's what it looks like on the weekly charts, right? So this whole support zone, this is what we're playing the rebound right now. Nice bounce off of 30 in momentum. All things held constant, it looks good. It's just the near-term structure from here. If this is the motive, we want one more correction, maybe one more low, kind of a three-wave type of play to get back on the resumption. But keep in mind, let me zoom out for a second. Keep in mind one thing, okay? If this is a triangle, which we only have 2 touches on the base here, so this is what concerns me. But, if this is the triangle, there's the break, right? Acceleration. The breach also fueled acceleration. That same slope still converges on 73.27, 73.36. So any way you slice it, watch this zone. Now, yesterday in the webinar, we discussed the fact that, maybe some people are looking, at this slope, right? Which would suggest this is the triangle, this is the break. Now we're testing it as resistance. Either way, you're highlighting the same levels still, guys, right? So either way, that would highlight again 73.74 as your breakout level to refute that trend line break. If we had it drawn the way I had it originally, again, that support structure highlights a major key level we're watching. We've been watching 73.74 anyway, so the levels are very clear. All I'm trying to say is the levels are super clear here on Aussie. I'm just kind of trying to pick and choose how I want to replay this. The play for me, and you might have seen Aussie or Jamie yesterday, he put out as well, 73.85. We're looking for kind of a little bit of a reversal play to play the short side. I don't know if I necessarily want to take that approach at this point. I think that play was last night. Last night, the whole shift yesterday, heading into resistance, right, was the play for that move lower. There's this move here into support. That's all I'd be interested in on the short side. Okay, if we break the bottom of this, sell rallies for sure, 73.36 into 73. But I'm hesitant to do anything on the short side while above this region. Okay, it's really, really critical. And remember how important that level is. We've been watching that threshold for seems like years at this point. All right, that's Aussie. Going once, going twice, sold. That's number 3. Kiwi dollar. Bailed on this one too early too. It seems like the name of the game. But also a trade that's, yesterday was kind of highlighting, watch out, okay, because we're at resistance. Kiwi was a beautiful play to the upside. You saw earlier in the week, if you recall, on the previous update on the 20th, we were talking about the fact that we had identified this new slope, and some interesting regions came up in as like levels of interest. 66.60 into 66.75 was the major resistance that we were talking about, the target on the upside. We came into here and we sat here for a little bit, but when we breached, where did we shoot up? Right into the next target. 67.14, 67.05 is 10 pip region, a region of which yesterday we highlighted as something that could cause us a little bit of an interruption, right? Huge pivot in price, absolutely paramount. Here's what it looks like on the weekly charts. Key 618 retracement of the entire advance from 2015. Okay. The daily charts further highlighted that region again with that 618 former swing lows. Intraday, again, looked like this. Here's what Kiwi looks like now. Okay, here's what Kiwi looks like now. So we're essentially still right under that major key resistance zone. It's a Fibonacci confluence, 100% extension, 618 retracement. You guys know it's my favorite Fibonacci confluence regions. Was very, very strong support, break, fueled acceleration. Here's the first test of it as resistance. Okay, so going back to the 120 minute here and probably even zooming into the 60 in just a moment, but the same thing exists here, guys. If you tried to play a short off it last night and you're still holding that, I would have the stop against the high. I wouldn't go break even just yet. Your downside targets aren't changed, okay? 66.75, 66.60 on the stretch. I wouldn't even target something that low, but that's the only thing I'd be looking to play on the pullback. Ultimately, if we get through 67.15, that's your target. Former triangle support, break, acceleration. That level now comes up about 67.40, 67.39. Okay, but again, like this is, you don't want to position for a long side from here. These are just highlighted targets if you are long, but more so on a move like this, I would actually be looking to fade this a little bit. You're coming from oversold territory. If we start to see a little bit more of a clear divergent on a new high, I'd actually be interested in trying to short this a little bit. Levels remain unchanged though. It's pretty astounding how some of these trades guys kind of just, once they start getting a move on it, it's just like one-way directional trade. Now, you might have seen on TV today. If you haven't, you probably will on Reuters and Bloomberg and CNBC and all the financial publications. Today marks a historical day, and that is now the longest recorded rally in history for U.S. equities. Okay, so these kind of extreme studies, they make for good headlines, guys, for making an effective trade strategy or an opportunity. It's not something that you want to filter into your decision-making process, but man, SPX, we'll take a look at that in a moment. That, where we turned from, it's just getting kind of freaky here. So anyway, I digress. Any questions here on QE before I move off? Near-term support 66.75, bullish inval 66.60, topside breach. You're looking for 67.40. It seems big news event pending. We can't see all the dollar pairs are pretty much a chorus and approaching critical turning points. Ty, I completely agree with you. Again, this is just my humble opinion. I don't want to go on a rant, but I do think people, let me take a step back. Every year since Bernanke's QE bombshell that he dropped, post financial crisis at Jackson Hole, every year since then, it's been all the hype and talk of the town. What are we going to get? Are we going to get any major announcements or hints on the future path of monetary policy? I hate this noise, guys. I absolutely detest it. Whether we get something or not, essentially we have to wait and see. But yes, markets will tend to go in a holding pattern. The major thing that you got last night, obviously all this news, and I don't want to get into the politics of it all, guys, but the Paul Manafort case, the Michael Cohen case here in the United States, its possible linkage to the Trump campaign and what implications that could have for, the risk to the presidency. As it seems as if that's when the market kind of turned yesterday, especially on the SPX, which was already testing basically record highs. So look, I don't care about all this noise, and I don't want that to filter into my trading. But all I do want to say is that, yeah, it seems that you're right, Ty, markets are in a holding position. The washout, as it were, on the dollar, I don't necessarily think is done. I just think you take a pause here. There's a couple of hits that we took to the market psychology back to back this week. First, the whole thing that Trump says that he's not happy with Powell not being an easy money type of guy. You saw people start to ask or question or all this talk of the town that, oh, maybe, he's going to impact Fed policy or the Fed will be more reluctant to raise rates, whatever. Then you got yesterday's announcements and guilty pleas and guilty verdicts, and that took another hit. So watch the headlines, guys. Jackson Hole is really the major event risk that everyone's watching. We do get some data later today. Like I said, the minutes could offer a little bit of a reprieve to some of this dollar beatdown, but that's why I want to know the levels and be ready and prepped to go once we mark resumption again. You got me all on a tangent, Ty, but absolutely, August has been action-packed, not like last year. Ty, and typically August is not um, a great year, a great month for volatility, right? It's awesome. I love it. Because you're in the summer lull, everyone's still on vacation, markets are kind of winding down. Once you get past Labor Day, now we start to get back into the swing of things. September opens, you have the political event risk with the November midterm elections coming up. Yeah, there's a lot of stuff coming up, but August is typically not. You're going to be your action-packed month. It's great to see that shift. And it's interesting because, guys, we always remind you that periods of real contracted volatility typically precede surges in volatility, right? So it's funny because just as things are getting boring, you might see that on the intraday chart updates. I'm only giving you 1 or 2 charts to look at because there's really not much there. We do that on purpose, guys. Okay, FOMO is a deadly thing in trading, right? We can't, the fear of missing out. We have to be objective, and when markets go in a lull, we just have to be ready, have our levels set up. When we get that surge in volatility, we don't want to waste time having to work our levels. We want to know what to look for right off the bat. So I digress. Dollar Swiss, let's move right along. Beautiful trade, absolutely magnificent. I don't want to stunt with you guys. I did not get in on this, but I hope some of you did. This was such a beautiful range break. We highlighted it a day before it happened. Once the break happened, it was just a smooth shot to the downside. Here's Dollar Swiss on the weekly charts, just to highlight the level of significance of which we're coming off of. Parity 40, parity 90. Okay, 10040, 10090, huge region of resistance. You had slope up there, you had a 786 retracement, you had the former swing highs from October of last year. A clear-cut range was defined into the 98.45 level. We talked about this, looking for the break. Here's a weekly close, or here's the weekly break below. We want to see the close below. Weekly support doesn't come into like 97.44. Okay, you're looking at the 200 week and the 52 week moving averages, long-term stuff. Okay, on the downside in Swissy. Dollar Swiss on the daily chart looks like this. Really nice consolidation below that critical resistance range. More importantly, and the most objective trade of the lot that we're covering today, is the fact that we had a very well-defined, clear monthly opening range. Here's your August open. You set a high. You test open, monthly open support. Turns out to be the monthly opening range lows. Test the monthly opening range highs, it holds. Test again, it holds. Now on the final approach into the monthly opening range lows, the monthly open converges on the 100-day moving average, slope support, and the 618 retracement of the advance from the lows you made in June. All of that coincided here. So guys, as soon as you see that break, you're essentially just looking for a bounce to sell against that very region. Downside targets that we talked about, the first major level that we were looking at was 98.48 to 98.45. That's the objective yearly opening range highs. Here's your January open, January high, and a 786 retracement of the advance. We stopped right there yesterday, right there. We closed just above it. Again, I was looking for a little bit of a rebound to try to get short. Sub 98.95, you're looking for that downside break. Ultimately, we're looking for a tag of the 97.84 target. That's a 100% extension from the decline off the yearly highs. I still think you get it, okay? Near term, though, you are coming into some support right now, and that's evident on the intraday chart. Here's what it looked like yesterday. And here's what it looks like and now. Here's the break of that key 99 target, 98.95. Here's where we were yesterday. And I was a little concerned, okay? We were still deep in oversold territory, but sub 99, you're looking lower. Next downside target is basic parallel support. This is a simple parallel extending off of this slope. Here's Swissy now. Right? You can't make this stuff up, guys. It's absolutely stunning. Really clean stuff. So we're there, right? We're there. Again, if you're holding short exposure, I would be taking something off the table here. Bring your stops down. If you're short from anything northbound of 98.48, I'd have a stop just above that swing high. So like 98.55, lock in any profits that you have beyond that. Beyond here, I have a soft target at the June low. That's 97.88. Don't book anything or don't close the trade there. Maybe peel a little bit off. But your next major area of support is the yearly open and the 200-day moving average. Those converge right down here. You see this? 200-day moving average, yearly open, broader 38.2 of the yearly range is 97.33. So 97.33, unfortunately, into 97.50. It's a big region. That whole area is just littered with really important technical and factors. So as it stands right now, all things held constant, you're coming into near-term support. Don't be surprised if you see a little bit of a recovery into the U.S. trade session. Near-term resistance 98.45, 98.48. Downside break targets pretty well defined and unchanged. Any questions on the Swissy trade? All right, that is number 5. Okay. Would you be interested in a? No, I would not be interested in a long. Look, I don't want to say I wouldn't completely be interested in it, but here's the thing: we're deep in oversold territory. You know, I can't get comfortable trying to fade a position like this. Right, support is support. When you get into it as a near-term trader, I'm always prepped to play a little bit of a rebound, a 20 pip, 15 pip bounce off support. But when you're deep in oversold territory, okay, or when you're in oversold in general, that's typically not the ones I'm going to want to play. You know what I mean? Let's always remember to the fact, guys, that when something's in oversold, this notion that we have to buy it is hogwash. Okay, that's not how it works. If price is at support and you're coming back from oversold conditions, you're seeing a strong trigger to the upside, that's different. Okay, something like this would have been a signal for a long position, save the fact that price wasn't at support, right? So I'm not going to try to do something like that here until we finally get some sort of reaction off of the structural support that we're looking at. Maybe it does give you a little bit of an opportunity to fade. On a long dollar position, guys, just as you know, a disclaimer, again, CAD is kind of the only one that I'm actually interested in playing. That I'm actually in. We'll take a look at that in a moment. But for Swissy, I'd be hesitant to try to fight that per se. Here's dollar yen. So the abomination still ridiculously clear. Here's dollar yen as it stood earlier in the week. We've been following this one. It's been something that we've been following day in, day out. We've been talking about the 109.90 level at length, okay? Real critical level since early in the month. You have the 100-day, 200-day moving averages, 38.2 retracement, slope support. It's all loaded there, okay? We came right into it early in the week, jackknifed higher. We noted that our bearish invalidation was 111.12. We brought that down yesterday to basically the weekly open. We came into weekly open yesterday, pull back, and here's the consolidation. Look, on its face, dollar yen has simply made a weekly opening range above key support. Treat it as such. Okay, treat it as such. If we see a break of the top side, I'm personally not interested in buying it, but you would look for channel resistance for exhaustion. The more favored move that we see is a downside break. Remember, again, the technical significance, the considerations that lie at 109.90 are really paramount. I mean, I really can't stress it enough. Big region, just absolutely huge. So if we are able to make it beyond 109.91, remember, there is a soft target at 109.50s. That's going to be the 100% extension. So if this is going to be a fake out on the break, that's the last thing you'd want to look for. But again, a break below this, it's a long way down possibly. So immediately sitting here, I think you get some more chop sideways action. Um, if I had to be in a position on dollar yen, I'd rather be short. That's just my humble opinion. Um, but we got to see that break and daily close settling below 109.90 to get this thing going. There's just so much littered there, guys. Okay, so the trade from our prospects for the near term, the trade for us was into 109.90. Now that we've made this bounce, let this thing settle. Immediate focus is on 109.90, 105.60 breach. Again, that's the weekly open. That's kind of the range break I'm focused on near term. All things held constant, I favor a downside break at that key support in dollar yen. Questions, comments, concerns on the yen ski? All right, and all in all, dollar yen is actually unchanged on the session, guys. So from yesterday. So wait for some decision here in near-term momentum. Hopefully we get something. I'm really tempted to try to jump back into a short. So long as we're able to hold 110.58 into the open. Watch this near-term consolidation here. Not shown here, but wedge under construction. Are you talking about this? What I'm just drawing right here? Ty? Yeah, you're in a near-term consolidation for sure. Bigger time frame. How big? Depends how wide scale you want to go. Yeah, I could kind of see the argument being made that this is some sort of larger, huge wedge pattern. But for me, it's just all about 109.90. Whether you're going to play the long side off that or whether you're going to play the short break below, that's the pivot. All right, let's keep moving. Sterling dollar number 7. Don't have the guts to get into this. I talked to you guys about this pivot yesterday. Obviously, we said look for a reaction. Obviously, I think the market spoke pretty clear. It's uncanny. You look at these things even in momentum, right? The downside break of that 4-point support trigger was sort of the onset of the break below those former swing lows from October, November of last year, right? The pivot break back above that same slope trigger, which was support, now resistance, also coincided with the pivot back above that slope support. Look, Sterling, I think, it's pretty clear at this point you're making a pretty big rebound off of some sort of near-term significant low in price. How you look to chase that, I don't know, of the lot, okay, of Swissy, Kiwi, Euro, not CAD, Sterling is the weakest as far as the gains that it's made against the dollar, guys. So it's warranted. It's not only that we get the dollar pullback, it's best that we focus on which one's giving us the most juice for the dollar, okay? So, like I said, over the last just couple of days, Sterling's actually not seen the bulk of the advances we've seen elsewhere. Is there such a thing as an RSI throwover? Yeah, I don't know. I don't. Not that I don't know. I don't know, Ty. To put it in a simple way, I don't consider throwovers in RSI a thing. You know what I mean? A throw over in price is suggestive in that there's a psychological thing behind it. The market gets through that level, the shorts start getting stopped out. The longs who are taking the position into there now start to clear out. So they, as that simultaneous move happens, you see the market run into the resistance, shoot through, then shoot back below. A throw over in price is different from a throw over in momentum. A throw over in momentum, if it pegs up there, then comes back, that's just an operable short trigger if it breaks back below 70. So I wouldn't necessarily define that as a throw over type of play. In price, there's a psychological thing behind it that actually um, gives you a tell, right, on what the market's doing. Whereas I don't think you get that same positioning in momentum. Anyway, Ty, here's the Sterling intraday chart. Okay, so the daily, here's my problem with Sterling. Here's the weekly chart. What the hell is that? And this has been my reluctance to get into Sterling because the break here below 28.77, you guys know, was pretty big for me. Pretty big for me. I really thought you were going to get a drop into 25.89, former slope resistance from 2014. You have former swing lows from 2017. I kind of don't like where you turned, and here you are right back above. So this could be a false break of support. Yeah, ugly is the right word, Ty. Yeah, absolutely. So then the daily chart, we just talked about this. This pivot break puts us back constructive, but how do you attack it? Here's the intraday. So the levels that we were looking at yesterday in the webinar, that pitchfork that we added on, remember we highlighted that 128.77 level? Look at this thing, boom, back into resistance, pulled right back into it. You couldn't even get back below. Here's the pivot and push higher. So look, for Sterling, at this point, you stay constructive above 127.75. You're an overbought. It's not a time to try to fight it. Move higher takes you 30.27 is the next level I'm looking at as far as significance. Near-term support here. Bullish inval, like I said, 27.75 would be the bullish inval for me. Top side target beyond would be here. Now, again, once we get some, more clarity in price, guys, I'd want to kind of tack on some sort of more close near-term intraday studies. We just don't have enough price action to start doing that yet. We haven't even gotten a decent pullback in price since the advance. Maybe work with something like this. Still highlights same levels, 27.75 near-term support. Parallel, just extending off the low that you made back here. You saw the break, fueled acceleration, resistance, the breach, saw acceleration, support. That gives you near-term support here. And further highlights the significance if we get a break higher than this in the US trade session. We just constructed all of this, guys, that you're looking at just off of these two reference points. Boom, boom, every subsequent parallel. This tells us that we're working with the proper gradient the market's traveling on. So suggest near term, if you see a breach here, remember a break of upslope resistance will typically be a very sharp rally. Same respect, you do not want to position anything fresh on the long side right here because you're heading into near-term slope resistance. So we'll see if Sterling can get us some sort of pullback. I'd like to play the long side, but sure as hell can't buy on the long. Buy on the high rather. That is number 7, Sterling. Any questions on the British pound? All right, number 8, dollar CAD, and then we'll jump into the SPX and take a look at gold real quick. Here's dollar CAD. Look, you're at monthly open support right now. Jamie's entry was uncanny. I think he had the entry yesterday on the swing trade for 130.04. The low was 130.06, if I'm not mistaken, 130.07. Okay. 786 retracement off the low. Monthly open support. Again, that's what those dotted purple lines are right here on the daily chart, and slope support. Here's the pitchfork on the daily chart. This is just off the yearly lows, it's a modified pitchfork. Here's the lower parallel. Here's it converging on monthly open support. Here's a former momentum trigger, broken, tested as support, rebound, again a turn before 60, and here we are testing support again. So guys, if we are able to materially break below this region, you're straight looking lower in dollar CAD. This thing has just made a monthly opening range just above 100% extension. So here's the extension off the high, boom, boom, boom. We open the month, here's your vertical line. We make a monthly low there. We stretch into a monthly high at a 618 retracement of the range, and that's all we've done all month. So the primary focus is on a material break below this region to open up the downside targets in dollar CAD. Near term, this might be an offer for a rebound on the long side. And this is why, as I said earlier in the session, if you're going to try to fade dollar's weakness, the one I'm interested in is dollar CAD. Okay, is dollar CAD. Now you're seeing again some divergence here in price. Here's your 2-hour chart with a lower low in the oscillator, higher low, or a lower low in price, excuse me, higher low in the oscillator, both reference points above 30. Pretty decent signal, right? So if we're going to get a bounce, this is the spot to look. Okay. I'm worth, it's worth a shot for me into 30.43. We just missed it here on the pullback. So if I get stopped out on this, I get stopped out on this, but I do think it's worth a little bit of a rebound, at least into 30.43 on that front. The weekly open, I want to just adjust the target just a tad from this stretch level here, 30.67. The only thing I want to add is just the weekly open right here. It's something I would look at because we stretched right into it yesterday before turning. That's 30.60, 30.59. So, levels of which I'd probably bail on the rest of the long position if we get up here in US trade. Any questions on dollar CAD? Not the cleanest setup, guys, but I wanted to highlight that you are coming into a near-term support structure, namely the monthly open, namely slope support, and former swing lows at that 786 retracement. Questions on dollar CAD? All right, guys, so that's the dollar crosses that I have on the menu. This is where I've been following. I mean, all the majors are at play here. Sterling is probably the lowest conviction of the lot. So just be careful on that one, but you're coming off certainly some major extremes in price. And don't forget the studies that we talked about last week, guys, with the consecutive weeks declines that we've seen in sterling, consecutive day declines, a lot of extremes in general. Even looking at things on a sentiment basis, if you look at euro dollar, sentiment on the IG index of client positioning does show a dramatic pullback from long exposure. Traders are all trying to stack up on the short side of the euro. It's further fueling the upside here. So it's not going to be a straight shot. I do think you get an interruption, like I said, but the sentiment is continuing to swing in that fashion as well. Here's gold. Here's gold. Boy, what a beautiful setup. This was a beautiful set. We talked about the fact that we were coming into major critical support into the start of the week after last week's failure to close below 1175, 1171. Confluence Fibonacci support, long-term slope support, huge region. We talked about the fact that IDO Search, our pattern recognition software, for those of you who are on SB Premium, that has continued to really highlight gold on a day in, day out basis, whether it's the 3-month look back, the 6-month look back, or even the longer pattern studies on IDO. They all are really starting to suggest and lean more bullish in gold. We also took a look at the consecutive down indicator on this and how many consecutive decline weeks we've seen. 6 weeks declines. There's been 4 instances previous. We looked back at that yesterday. All 4 instances, 2 of which were 7-week declines, did see 10% or more upside in gold on the back of those declines. So look, it's a primed in price, it's primed in time, and it's primed in sentiment as far as the extremes in gold. And certainly this was a pretty big level. So 1175, 1171 was the level to trade against. Here's the daily chart, even near term on the fact of the point that we made just the pitchfork off of the yearly highs. The lower parallel was a perfect spot on touch of support. Here's the rally. We talked about 1204 But now that we've had a little bit of a decay in time, guys, a couple of days out, watch that slope. Basic median line of the current operative pitchfork comes in just ahead of that March low day close at 1204. So here's your March low day close from last year. Okay, there's a low day close. It turned out to be the exact July low. Turned out to be the exact August opening range lows. The break was the onset that fueled acceleration in the decline. That same level comes just above the parallel at 1204. So what does that mean? Well, we've had a 5-day ripperoo off the lows. Start to soften your expectations on gold near term as you head towards that median line. Another thing I wanted to highlight is we did get a daily close above that year-long resistance trigger in momentum. Okay, 1 point, 2 point, 3 point, 4 point touch. We closed above yesterday. So a change in the momentum profile, a behavioral change in what we're looking at. Ty says no one sees the math better than you. Cheers, Ty. I appreciate that, man. And again, these are not my levels, man. This is the market speaking. I'm just trying to help you identify it, right? Interpret what it's saying. So these little tidbits, as everyone's starting to, oh my God, this is a great opportunity to get back short on gold. Hey, if that's your trade, man, go for it. We came off a big level. Our focus has been bullish. At this point, you want to soften that tone, but certainly you're coming into a level of resistance. Here's what it looks like on the intraday charts. Okay, note on fact that we're on the 60-minute chart, you're also getting ongoing divergence into this high price action with a higher high, higher high, higher high, the oscillator with a lower high. So, exhaustion, sure. Near-term pullback, why not? Corrective, absolutely. I still think this thing's got more upside to go. Would you look at that? Okay. Watch near-term support. Watch near-term support right at the swing low. If you guys are holding long exposure on the real, whoops, it's not what I wanted to do. If you guys are holding short exposure, or if you guys are holding long exposure, if it breaks below 1192, why does it keep doing that? There you go. If it breaks below here, I'd kind of expect a larger near-term pullback in price. But yeah, I mean, you have to make the assumption that some sort of key low has been put in place, at least on the near term in gold prices. Okay, so I hope that offers some perspective, guys, for those of you trading gold. The level is just super clear. Again, 1204 being the major initial resistance that you're looking for on the near-term front. Does look a little tired. Wouldn't be surprised if you see some sort of corrective pullback. All things held constant, I'm still constructive above 1180, period. Period. Okay. SPX. Here's what we look like. Man, oh man, what a fake out yesterday. What a fake out yesterday. So look, we talked about 2860 being a big level of resistance to the 1618 extension from the advance off the lows they made back here in March. You had the actual high day reversal close at 2851. We've been trading in that range for the last 3 days. Look, yesterday broke to the upside. We were talking about possibility for a short exposure off this region yesterday. It blew through, but then you got those releases, those guilty pleas, whatever you want to say caused the reversal. I don't care. At the end of the day, price failed just ahead of slope resistance, and we closed again well below 2860. Here's the close for SPX. Okay, so rinse, repeat, Pete. We're there again. We're there again. Same exact thing as yesterday. You don't want to get overzealous here on a long position because you haven't been able to clear this zone. The same respect, the short side hasn't really paid yet, hasn't really justified itself, I think, in near-term price action. Here's what it looks like. Um, Certainly that breakdown and reversal, you know what I'm saying? Again, if you do take a short exposure, anything on the short side would be against this high. I just don't see, I don't see anything here that puts me in. Peter says, what to do? Yeah, Pete, nothing, man. If you want my honest opinion on SPOOs, or on the SPX, as we often call it, SPOOs, I don't, I don't want to fight it. Don't want to fight it. And then you have, Jackson Hole on Friday. It's just not my cup of tea here. Interestingly enough, you look at some of the other equity markets. Here's the AUS 200, Aussie markets. I follow very closely, um, in conjunction for IG Australia. But look, this is, again, we came off a huge region of resistance, 63.76, 63.88, ridiculous reversal. Took you right back below the monthly open. That's now resistance, right below 63, 62.94. You take a look at the German 30 that came off of a big resistance last month, came off of big support. Like this rebound, is there more to go? Markets seem to be, digesting things on their own sort of play. Here's the Nikkei 225 consolidation, right? Looks nothing like the others would like the other sets. It's just SPX, which is at the, stretching into record highs. So, yeah, Pete, it's not a, it's not for me to try to fight the long side here. Again, if put a gun to my head, I would favor still shorting, stretches into this region, but luckily no one's putting a gun to my head, so I won't do that. All right, guys, any other questions or trade setups you'd like to review? Do feel free to throw them on the message board. Don't forget, Jamie's up with the midweek strategy webinar in just a few hours. So you can pick his brain a little bit on some of the longer term swing trades that we've been looking at. And we'll wrap things up tomorrow. Marco, Aussie yen if possible. Yeah, let's take a look at Aussie yen. Okay, let's clean this up a bit. Aussie yen, eh? Ooh, didn't quite get the tag. Interesting. I'm surprised I didn't bring my attention to this earlier. So 79.49, 45, 79.26. This was the ultimate target on the downside break of this critical pivot region that we've been watching in Aussie yen for years. This is bearish invalidation. A breach back above 82 is bearish invalidation. If we get back above that, certainly refute the broader slow pattern that we've been following here, right? And get us back above that major critical pivot in price. Resistance, breach, acceleration, support. Got a false break here earlier in the year. Finally broke below. That's your level of interest, in Aussie yen on the weekly chart. Okay, bear with me, guys. I just want to see what this looks like. Hmm. Okay. Look, tentatively speaking, I would like to stay constructive above 80.56. 82 is the line in the sand that you need to get above to kind of clear the way for a larger near-term reversal at least. But there's really nothing here, to be quite frank with you, Marco, that kind of pulls me or screams opportunity like right now. Okay, I got to redo these levels for you. Let me play with this tonight. You sparked my interest, and I'll see what I'll have for you tomorrow. My only issue with this, Marco, is that I'm not, I want to see dollar yen break lower. That's yen strength. And I like the Aussie strength too, right? I think Aussie, if it gets the rebound and holds 73.27 as support, I think that bounces higher too. So inherently, I don't like to trade like that by putting stipulations. I'm bullish this, I'm bearish that, so therefore the cross. I don't like to do that typically. But with where price is right now too, I think it's warranted to be cautious here. All things held constant. Again, gun to my head, I do think you move higher here in Aussie yen, at least for a little bit larger recovery, just on the basis of the major support that we kind of turned ahead of. Um, 82 is the line in the sand. I think you do get higher near term, but 82 is the line in the sand. I wouldn't want to be bullish beyond that. I think you get sort of a rally towards this region right here near term. Does that make sense? I'd want to reevaluate if we get into 82. Near term, I do favor a move into 82. Let's see if there's something real near term here. Marco, does that help? I mean, you're getting super granular here, but you get the picture, right? You get the picture. He says, okay, yes. All right. Okay, guys, wrap it up there. Best of luck trading. Again, watch the FOMC minutes release later today. Jamie will be on in just a few hours for the midweek strategy webinar, and I will see you all tomorrow morning. Cheers.